So yeah, if you take it this year, it's ultimately obesity. Well, that's kind of the market caps on those have finally gone on a diet. AI, clearly we can talk about. The only people who don't think AI is a multi-trillion-dollar business is people who use it to answer a pub quiz. It's just a phenomenal and incredible tool.
Welcome back, everybody. So we got Will Nutting on the show. Welcome back, sir.
Morning, Rich.
Now, how's the portfolio been doing this year?
We've had a good. It's been hellishly volatile. I think we were up 19 in the first. We're up 19% for the first 6 weeks of the year. It then went down. I think I went down to down 9, which would have meant that any external investor would have come around and shot me and taken all the money out. And we're now back up 15. So we had a good run. Yeah, you've got it on the.
That's fantastic. Take us through some of those names there, then.
Well, we were going to talk about them. I think Bitcoin top left. To me is just the classic. It's the classic offset to the constant printing of money, to offset the appalling demographics, the huge entitlement, and the debt in the West. So I don't think it's much more complicated than that. I think corporates now. I think Connor Smith was saying this morning that corporates, good stat, 1.8 million of the 21 million Bitcoin is now owned by corporates. I think that number is just going to go higher and higher and higher, because if you own sterling or you own dollars on your balance sheet as a corporate, you're ultimately owning an asset. You're ultimately owning something that's being inflated away, and the purchasing power of those dollars is going down. So if you talk to the board of any of those companies, are they ultimately performing a fiduciary responsibility to their shareholders? And I would argue not. So
no.
That conversation that Microsoft were having at a board level 6-9 months ago, I suspect that conversation happens in 6 or 9 months again, and I think the decision might be a different decision.
Yeah, definitely.
So I think that's hugely exciting. And then we got sort of special situation stuff like, so the nuclear uranium story, BWXT, great implementer. They put all the nuclear their nuclear reactors onto U.S. naval ships.
Wow.
Great implementer, fantastic, great sort of mid-cap story. Lightbridge is a here story and a future story for uranium. They in fact report the numbers tonight, and I would imagine it'll be a very, very positive call. But they ultimately have an existing nuclear fuel technology that makes existing nuclear reactors significantly more effective. The fuel burns, or the fuel operates at a much lower level. They're also hugely involved in future fuel for nuclear reactors. So Lightbridge has been a key story for us. UEC, uranium miner. You're clearly having to take a view on where uranium utilization and mining is going. Leonardo is a European stock.
That's the defense name, isn't it?
That's a defense name. So yeah, if you take it this year, it's ultimately obesity. Well, that's kind of the market caps on those have finally gone on a diet. AI, clearly we can talk about. The only people who don't think AI is a multi-trillion-dollar business is people who use it to answer a pub quiz. It's just a phenomenal and incredible tool. I have no idea what the valuation of these things should be. And then defense, and my worry is that if there is some kind of come to Jesus moment at the end of this week in Anchorage with Trump and Putin, and the reality of what they need to do comes to mind, then it would be interesting to see how defense stocks actually react.
Yeah,
because I think longer term, there's no doubt about it, European companies want to spend. You heard JD Vance yesterday, as his enormous motorcade was apparently streaking its way through Oxfordshire, saying that ultimately the US doesn't want to spend any more money on Ukraine, but if foreign governments and foreign countries want to buy US defense equipment from US defense contractors, they'll be incredibly happy to sell it. So that's very noble of Vice President Vance.
Now, going back to your point on AI, do you think that, or when do you think the time to start buying ordinary companies for their margin benefit from implementing AI is, and how long do you think the actual the hard?
So I think this is really interesting. I was writing a piece this morning, and I said that it's within 18 months, most people think your bin will empty itself, the cat will speak Mandarin, and no one will ever have to work again except to post on LinkedIn. But someone's going to have to lay the tarmac in the rain. The nurse, I don't think AI is going to be changing your bedpan.
No.
The man with the digger, so if a robot can't do it, a human has to do it. So I'm kind of looking at staffing companies. I'm looking at equipment rental companies, industrial kit hire, industrial contractors. So I think the industrial economy should benefit alongside this. It's more of a stock market phenomenon, which is that, if you build it, they will come.
Yeah.
You've just got the amount of money that's flooding into index funds. It's just so much easier to own. And I think maybe even the bigger point is that if you look at the best thematics in the market at the moment, and you're an investor and you stand back, I think the other challenge is that, and I think I've written this quite a lot recently, is that you went back 18 months, 7 or 8 of those thematics, if you look for the best way to play those are US companies on the whole. And that's why I've always loved US equities. I've done it for 30 years, US companies on the whole. I think you're just beginning to see that now maybe become 8 goes to 6. And if 8 goes to 6, the asset allocation implications for that, and you were to get some kind of a resolution to the Ukraine issue, and you were to get some kind of, cessation of hugely expensive power in Europe, then I think that does something to the asset allocation side for European equities, and maybe. So I don't know whether that...
So it's only just begun?
It's only just begun.
Right.
And it takes a long time.
Yeah.
The Ontario Teachers Pension Fund does not move in a hurry. And, I think that's the positive argument for digital assets. It's a positive argument for tokenization. But I think the thematic that I think is most interesting here is I think you're going to see the Mag 7 give way to what I call the Block 7 over the next 4 or 5 years. And I think what you're going to see is, I think with blockchain becoming a more recognized and real technology, I think you're going to start to see 6 or 7 really key protocols emerge that I think will be the blockchain 7. So they will be the block 7. So I'm owning this. I'm owning that.
Yeah. You heard it here first.
But I think Mag 7 to block 7 is a really interesting story. And so I've talked a lot about helium. It's been a disastrous call. I've written an analogy of Siamese twins, which I've taken a bit of shit for. But the reality is that I think that helium, as a fastest growing mobile company in the US at the moment, almost twice as many daily users as Ethereum, yet it trades at a market cap of just over 500 million, and Ethereum is 5 billion. So I think what Helium are doing in the telecom world with real data, real mobile phones, real users, real consumption of broadband, that in all honesty is really fascinating when it comes to broadband, to blockchain, because unlike the Bitcoin companies and the Ethereum custody companies, which are custody companies, they're financial engineering companies, these are traditional businesses that are kind of sit as part of a parallel portfolio alongside their traditional stock market counterparts.
Now, this is Helium, the coin, not a stock.
This is Helium HNT, the token.
The token,
which you can buy on Revolut, you can buy it on CoinGecko, you can buy it wherever you want,
Right, we did discuss this, the top 40 most affected occupations by generative AI. So you've talked about the ones that won't be affected. Let's have a look at the ones that will. Now, how do we put this into a trade?
Well, you should just kick me out of the room now, because number 5, I'm screwed, aren't I?
So yeah, take us through the ones there that stick out that could be in actual companies that we trade.
I mean, maybe airlines become more optimized by technology. Telephone operators, ticket agents, travel clerks. I mean, I think these again, to me, are all telemarketers. This is all opportunities for me in the world of blockchain. So when I look at all this, I think that I just see not things that I necessarily want to short, because I think that stuff will take a long time. Why is OnlyFans going public? OnlyFans is going public because OnlyFans is core business with all the weirdness. And not that I know OnlyFans that well, but if you look at the data on OnlyFans and you look at what sells best on OnlyFans, it's a lot of very weird, strange stuff.
Right.
And I think the weird, strange stuff is going to be able to be replicated by AI significantly better than humans can do it. And so I would think that someone like an OnlyFans is trying to sell itself, before it gets disintermediated by AI.
Right. We've got one for you here that that you started taking interest in last week. Crocs.
Crocs paid in 2023, I think, when money was basically free, or almost free. They paid $2.5 billion for Hey Dude. And I think, to be honest, it's a brand that they're choking on. And I think this is their biggest problem. And some people might say, looking at this shoe, there's no reason why they aren't. There's a very good reason why they are choking on it.
Or at best, they overpaid for it.
But I think they overpaid for it. And I think they've struggled to differentiate it. And I think they've struggled to roll it out. And it may well just be a case of sticking to what you're good at and not trying to be too diversified. So I have no prior knowledge and no proprietary information, but I would suspect that they're probably having a really good look at Hey Dude and saying, this is kind of like, a bit like, who was it? Kate Middleton had her Uncle Gary. Was it Uncle Gary? Who you never wanted to turn up at the family events.
Oh yeah.
I suspect that Hey Dude might be the cousin or the uncle that you don't really want at the family events. So it may well be you suddenly see Crocs only stores. Maybe Hey Dude gets spun out to a separate entity, but I would think there's a value unlock maybe to come at Crocs, and it should be on people's radar screens now, and it's certainly gone from being a cautious thing to me to being something positive. And the margins on core Crocs, they're almost like luxury margins.
Well, so Angeline, I know, wants to have a chat with you about Crocs as well as a couple of other things. So we're going to go to a very quick 1-minute break, and then you're going to get Angeline back quizzing Will.
Hey, trader friends, here we are. Will, really, really interested in all those names that you had to do with uranium and nuclear as well. I too have some exposure in that space, and I am in the spot uranium miners.
Okay.
In terms of a diversified play, because I don't want to, pick individual names. So I didn't want to spend time having to look at each individual one.
Yeah.
Views on an ETF, uranium miners? You like it or don't like that sort of position?
I think I think ETFs are fine. ETFs make money on the whole for the people who issue them. They're not the best way of generating alpha for investors. So I think I'd rather own the sort of picks and shovels, the gold rush, than own the mines, because I think it's going to take a long time. I've been to a uranium mine in Namibia 2 years ago, Chinese owned uranium mine. And they're highly complicated things, and so I'm not sure I need to. I mean, I own UEC, I own Cameco. It's more a case of when people come to this space, what are they going to come to? I think the smart, savvy, company-specific people will come to an ASPI, they'll come to a Lightbridge, they'll come to a BWXT, etc. And then for sure they might even come to a Sprott, an SRI, which is an interesting name, which ultimately puts together the whole sort of collectors for these things. But I don't have I think you can own. Pretty much think you can own them all.
I'm neither smart nor clever, so I'm very simple. So my main premise, I'm hoping you're going to shoot holes in my theory.
What's your main premise?
So my main theory is that, as a race, as a human race, we're not really dealing with the real problem of climate change and energy. And ultimately, there is only one fix, right? And that is nuclear.
Well, I don't know that's true. I'm massively pro nuclear, but I think solar, solar arrays, batteries are absolutely also going to be, very, very significant. And I think it's going to take a long time to build the nuclear. And I think, there's going to be a lot of NIMBYism when it comes to nuclear, increasingly. And so I don't think it's a one-horse race. I think,
Oh, don't get me wrong, I think there'll still be a mix, but I think ultimately we'll wait so long to the point where the mix isn't going to solve the problem anymore, and then there is just one solution, and that is nuclear.
Well,
and just to give a baseline, right, for energy.
We may well be able to put solar on the moon and somehow beam it to Earth. I mean, I think there's, I think in the next 10 or 20 years, there can just be some extraordinary technologies. But from an investment perspective, would I next door to, well, take it as a technology that gets you across the chasm to the other side, okay, from fossil fuels to something possibly in the future that is clean and so far we think pretty safe, then I think nuclear is the bridge, is one of the key constituents of the bridge. And I think you've got to own the bridge, and you've just got to work out what's on that bridge.
Exactly. So the bridge, in my mind, is just, it gives that stable baseline energy, and then you can, do what you like on the top, but it provides the baseline.
The question, I guess, for you is, where are you going to see the numbers support the stock market? Because we know what the stock market is like. The stock market needs positive news. It needs information. It needs to see trajectory. One of the reasons why the Mag 7 stocks are doing so well is because, to be honest, the numbers are still incredible and extraordinary. I think so. I wonder whether you're going to get that with uranium miners, because what happens is that as soon as mining companies start to dig holes, it becomes very expensive. And they don't dig holes with AI. I mean, AI may enable them to do stuff, but it's people and it's energy and it's costs and everything else. So I think that's where you've got to be a bit careful. I'm out of Cameco. I don't own Cameco, and I own UEC because I really like Amir, the CEO. I think he's a fantastic operator. So I think selectivity is key.
Interesting. Talking selectivity, I know that you want to talk about Crocs. Correct me if I'm wrong. I think Crocs was either banned or outlawed in schools in the United Kingdom because it caused too many accidents. But you're here to talk about the stock, I know, and you think perhaps just taking a look at the hourly chart, then going on to the daily, and then, it's had quite a fall from highs seen since July, but going back even further, let's see, this is the weekly view here, trader friends, weekly view, and then on to the monthly. So
this became a phenomenon stock, right? It's the kind of monster drinks of shoes. I think Crocs sell 150 million pairs of shoes and Nike sell 800 million. So that gives you the kind of context. But it's a very it's a very recognized brand. It's very Marmite. People love it or they hate it. I know from my daughter who works there, they have these amazing, they put little badges on your Crocs and you can personalize your Crocs. And I just ordered a whole bunch of Bitcoin Crocs, and they're, it's a bit of fun and they're not hugely expensive. And I believe anyone who works in the NHS or whatever, they wear Crocs because they find them incredibly comfortable.
Easy to get on and off.
Easy to get on and off. They're
easy to
clean,
sanitize.
easy to sanitize.
That's it.
So I think there's a huge core market. I was looking at if you look at the numbers, so 4.5 billion market cap. They're buying back 10% of the shares a year. They've just guided for still really good operating margins. They're paying down 500 million of debt a year. So the valuation is pretty nuts, to be honest now. So I think if they were to take a write down in some shape or form, you're basically getting a 20% market cap being bought back, and you're getting about a 16% EV to free cash flow yield. So it's not crazy, but 5 times earnings. I don't know. I think it's I think it's probably something pretty interesting.
You sound like you think this is an opportunity that's is looking cheap now.
Well, I think most things are cheap goes with the word nasty. So very often things that are cheap are nasty. I think this is maybe not quite cheap enough yet, but I think it's certainly you're beginning to get to a level whereby I would think that sort of value investors would start to have a look.
When would be a cheap enough? Where would be a good entry level? Just looking at the shares, is the hourly chart here. Let's go.
I don't know. I think on a price basis, it's impossible to say. I would think probably when they start to talk about what they're going to do about Hey Dude.
Great.
Because Hey Dude is it's like being a swimmer trying to swim with a sea anchor attached to your ankle.